I'd like to welcome all of you to our AgrAbility Wisconsin 2021 Virtual Summit. Of course, last year with the pandemic just kind of rearing up, we had to cancel our in-person summit, and with all the unknowns throughout the year, we never had any chance to do anything for 2020. So we're excited to be able to bring this to you virtually, 3 days in a row from 11 to 12 p.m. 3 different speakers. We're very excited. I'm just going to give a quick little AgrAbility update for everyone in case you're not familiar with AgrAbility of Wisconsin. This is how our program is set up through the University of Wisconsin-Madison Extension and College of Agriculture and Life Sciences, as well as Easter Seals, Wisconsin, and their farm program, which is the Farm Assessment and Rehabilitation Methods program. How we work is through the Biological Systems Engineering Department. Myself, Amanda Hargeth, I'm the outreach specialist for AgrAbility and have been doing that for about 2 years. So I take care of the public education, outreach, marketing, and grant writing. And then on the Easter Seal side, after I enroll our clients into the AgrAbility program, they take care of direct client services. And today we're excited to have Adam Steffen, the County Executive Director for Monroe, Crosse, and Juneau Counties with us, talking about FSA, safety net programs, loan opportunities with specifics to veterans and SDA farmers. Adam grew up on a small 35-head dairy operation in Clark County, Wisconsin. He served for 13 years in the Wisconsin Army National Guard as Infantry Squad Leader in the 1st BN 128th Infantry Regiment. He deployed to Iraq from 2009 to 2010. And then he graduated from the University of Wisconsin Stout in Menomonie with a BS or bachelor's degree in business administration with a concentration in leadership and military science. Within the Farm Service Agency or FSA, Adam worked as a farm loan officer for 4 years before beginning the county operations training program, where he then took on his current role as the executive director for Monroe, Crosse, and Juneau Counties in July of 2020. And with that, I'm gonna stop sharing my screen and pass it on over to Adam to get started.
Good morning, everyone. Can you hear me still? Hi, so like Amanda said, I'm a county executive director for farm service agencies for our farm programs. I used to be a farm loan officer. I guess I'd like to give you a little bit of background with FSA. I know sometimes it can be frustrating for producers when they call in if they're looking for a loan officer and they're getting a farm program technician. They may not know what they're talking about. So FSA is broken down into farm loan programs and then our farm programs. Same agency, 2 different supervisory structures. Funding comes out of different pots of money for us. That's really the difference. Our service centers, most are located, each county has one. We're starting to, they have in the past combined some offices, but for the most part, each county has a service center. And in those service centers, you have your farm program technicians that are running a lot of our safety net programs and disaster programs. A lot of the times there will be a farm loan officer in those offices, but our loan offices they have kind of hubs, and then the officers are out of the different offices. So Trempealeau County, where we're located in Whitehall, has our farm loan officer hub. That's where their manager, Brock Laufenberg, works out of. And they cover like 12 counties up from Pierce County, I believe, all the way down through Grant, Richland County down that way. So they cover a big turf. There's loan officers that are specific for each county. So if you're trying to get in contact with a loan officer, you can call any one of our service centers. Just try to tell them you need to get in contact with the loan officer. You need help with a loan, and they can redirect you there or give you the contact information for that. So I guess now at this point, I've got a little PowerPoint slide, and I'll go through. It's more of our loan making and loan opportunities that are available for people, and then after that, I can kind of touch on some of our farm program price support stuff. So if you currently are farming, these are opportunities for you to take advantage of some of our government programs to help safety net your operation. So now I'm going to attempt to share my screen. And how do I do that?
There should be a green, there should be a green button, Adam.
So is that showing now or no?
No.
Yeah. How about that?
No. Oh, it's coming up now.
Okay. All right, PowerPoint, here we go. So funding opportunities through the Farm Service Agency. Maybe. There we go. So our farm loan programs, we offer direct farm ownership loans and operating loans, guaranteed farm ownership and operating loans, microloans, youth emergency loans, youth loans, guaranteed conservation loans, farm storage facility loans, and marketing assistant loans. Through the PowerPoint, we'll go a little bit more in depth into each one of these. The information on the PowerPoint is pretty broad. So there's specific eligibility requirements for each type of these loans. So there's information available on farmers.gov, a little more in depth, or I would always just suggest that you reach out to your local service center and get in contact with one of our people, and they'll be able to set you straight. So FSA farm loan programs, farm loan program is designed to help farmers to start, expand, or maintain their current family farm. Temporary supervised credit for those unable to obtain credit elsewhere. So the aim of our program is to get a new farmer up and running, or somebody who comes into a hard time, get funding, get capital for them so they can either get back on their feet or get started, get them to a stable position, and then be able to transition them into more of a commercial line of credit through a bank or with a guaranteed loan where we can partner with a bank. We do have targeted funds for beginning farmers, historically underserved farmers are SDA applicants. Two types of loans: direct farm loans. That's where us FSA we make and service the loan and provide the supervised credit. So we're going to do the farm checks. We're going to work with a nutritionist or your field guy, whoever you're working with. We try to partner with them to try to make this as like a team, I guess, to get the operation going in a good direction. Producer is unable to get conventional credit directly or with an FSA guarantee. So that's part of our kind of our eligibility process is we would request our borrowers to reach out to a local bank if they already have one and see if they can work with them. If they can't, then maybe work with a lender on a guaranteed loan, and then our direct loans would be kind of falling after that. As I said, a loan officer will work directly with you. Repayment terms are tailored to your specific situation. A lot of times we do have better terms and rates than our normal credit partners. Low interest, extended repayment funds come from the U.S. Treasury, so it's actually your money anyways. Two types of loans are guaranteed loans. A local agricultural lender makes and services the loans. The producer works directly with the lender, such as a bank, farm credit, or a credit union. The loan is funded by the lender. The producer may fall short of the lender's normal underwriting standards due to repayment collateral. So that's where we do we put our government guarantee on it. So FSA guarantees up to 95% of the outstanding loan. So if the loan were to take a loss, the lender would really only take a 5% hit. So we're guaranteeing 95% of that loan. So it allows some lenders to work with some producers that they normally might not be able to. It's a really good program. Repayment rates and terms, they're that of the lender. We do have some stipulations in there for our lenders. to, it has to be normal for within the community. And so they can't price gouge, basically. So this is just kind of an overview of our loans for our direct farm ownership loan. So that's going to be bare land. You can have improved structures on that. So our direct loans, a maximum of $600,000. Our current rates are 2.875%. Terms up to 40 years. We like to start at 30, and then we can kind of massage that into the cash flow where need be. We can go out to 40. We like to start at 30 because if there ever is a need for servicing, if we do service the loan, 40 is the max. So we can amortize that loan out to 40 years, but if we start at 40, that's where we're at. We don't have any room for servicing. So like I said, we like to start at 30, and then we can move out if need be, or shorten it up if the cash flow allows. You can use it to purchase a farm. You can do construction projects, capital improvements, and paying your closing costs. Joint financing loans, that's where lender's going to do it, or you could do like a land contract. It's like a 50-50 loan. So that allows us to do even a lesser rate of 2.5%. The greater of 2% less than our normal rate, which they've been historically really low, or 2.5%. So right now it'd be 2.5%. And then we do have a direct down payment program loan. So a lot of times people call that the 545.50, and it's only available to beginning farmers, SDA, and veteran applicants. So, and that's where we do 5% cash down. Joint financer will do 50%, we'll do 45%. The joint financer gets the first position lien on the real estate, and then we'll do a 1.5% on a 20-year term. So that's a pretty popular program, great terms. Our direct operating loans, so for our operating loans, we can do equipment, breeding stocks, inputs for field work. You can refinance debt from another lender. Minor real estate improvements. The thing with the real estate improvements is that we can only term those out to 7 years. So again, like our real estate loans, our terms are 1 to 7 years. We usually start at 7. The rule of thumb is the useful life of the security of whatever we're securing the loan with. So if it's a really old, used, beat up piece of equipment, it may be less than 7, but typically we start at that 7-year mark. Our microloans, it's a really good program for people starting out, or even if you're established. So customers' dreams come first, not the loan. There's no traditional farms. For non-traditional farms, up to $1,000 gross income. So this can be your small niche. They call it truck farms. Sometimes your fruit, vegetable stand site type stuff. So it's a $50,000 loan limit, separate limits for OL and FO, and it's like an aggregate limit. So if you have a current loan of say $40,000, you'd still have $10,000 available to do a microloan. The application process is more streamlined. They get done quicker if you need the money faster normally. There's loose experiments and with good credit experience requirements, reduced collateral, cash flow, and analysis requirements. We have youth loans available. Those we have a $5,000 maximum for our youth loans. Those are aged 10 through 20. You can finance modest ag-related income producing educational products. So I was partnered. I did one with a young man who he bought a scale for his. He had a goat operation for 4-H or FFA. So he was able to finance that through us. It teaches responsibility, caretaking, and money management. So it's getting this younger generation to get comfortable with balance sheets and cash flows and business planning and marketing and that sort of stuff. They have to usually participate in 4-H, FFA, or some sort of similar organization, and they do have to have a mentor with the project, some adult kind of guiding them and helping them through it. Usually a cosigner is not required for those. Emergency loans are available. These are direct emergency loans, 100%. We have, there's two different types. There's production loss and physical loss. Emergency loans are kind of complicated. So we'll read through here. If you would ever be in need of one of these, I would say reach out to your local loan officer, because they're pretty intricate. There's some other eligibility. You have to reach out and have letters of denial from banks and that sort of stuff. So the rate right now is 2.5%, 1 to 7 years on non-real estate, 40 years for your typical physical losses on real estate. But yeah, they're used for natural disasters. Those unforeseeable kind of events, fires, that sort of stuff can happen with these. Our guaranteed loan program it's an extremely popular program. Our operating loans, our maximum loan amount is $1,776,000. That's adjusted annually with inflation. It stayed the same from last year, so it's the same rate from 2020 to 2021. Your loan rate is determined by the lender. There is a guarantee fee, origination fee with these loans. So whatever your loan amount is, 1.5% fee is paid to FSA, normally built into the loan. You can use these for our operating loans. You can get a line of credit, a renewable line of credit, which is handy for a lot of our crop producers. Term loans for equipment, breeding stock, you refinance debt with this a lot of the time. Farm ownership loan, same amount, up to 40 years, same guarantee fee. You can use it for capital improvements, putting in new parlors, robots, whatever you're looking at doing, or purchase real estate. Additional loans through FSA, we've got our farm storage facility loan. So this is kind of where that FP, FLP kind of crosses over a little bit. So our farm storage facility loans are facilitated through farm loan program, but they're actually a farm program, if that makes sense. 3 to 12 years, eligible for storage. So they do hay storage. A lot of people use them for bins, handling facilities. They've expanded what you can use the financing for. So I think you can refrigerator trucks, maybe even skid steers at this point. I think that you'd have to contact the offices to get all the details on those. And then we also have our marketing assistance loans. Those are through our MAL loans, or through our farm program folks. And this is basically where you're loaning on your previous year's crop. I think through 2023, corn is it's $2.20 a bushel. It is what we're loaning on those, and yeah, soybeans at $6.20. So you do have to have lien waivers on those. We do have to have a first position lien to that crop that we're using your crop to secure the loan with. Loan servicing. There's a lot with loan servicing. We are able to do a lot more than local lenders can in case of, a producer gets in a pinch, a hard time. So we have loan servicing opportunities. Our operating loans, we have the ability to stretch those out to 15 years if need be. We can do disaster set asides, a one-time disaster set aside on a loan if it's not within the last 2 years of the loan. So we have the ability to work with our lenders or our borrowers and just try to keep them in the game, I guess, to say. That makes sense. FSA helps thousands of Wisconsin families with capital needs. Currently, there's $592 million out in direct loans to 3,344 direct borrowers throughout the entire state. 1.5 billion dollars out in guaranteed money to all of our guaranteed borrowers. FSFL borrowers, we've got 21.6 million with 378, and those numbers are going up drastically. Last year, I think we had 3 applications in our area. We were at 18 this year. So People are looking for grain storage mainly. We do 800 to 900 marketing assistance loans each year. A lot of our crop producers come in and use those to finance their inputs for the spring. 2020, we funded 444 million direct and guaranteed loans, 738 loans totaling $124 million to beginning farmers or SDA applicants in 2020 alone. 38 FO and OL loans totaling 9.3 million to our veteran farmers. There's 2 to 3 direct loans applicants, 2 out of 3. Low delinquency rate and minimal loss rate. So that compared to traditional lending, we really do have exceptional. It just speaks to the quality of our farmers and our producers, the integrity and the work ethic. We have an extremely low delinquency rate considering we work with the riskiest, financially speaking, customers. And I think it's in large part due to we do a lot of hands-on working with our borrowers, helping them out, working with specialists in whatever field they may need to help them get through whatever they're working through. Typical receipt to approval from the day we get our completed application. So you may start out putting an application together, but the clock kind of starts once we get our totally complete application. Your loan officer that you're working with will tell you exactly what they need for that to be considered complete. On average, it's 22 days for a direct and 3 days for a guarantee. So those guarantees get pushed through pretty quick. Some of our general loan eligibility is you have to be a U.S. citizen. You have to have the legal capacity to enter into a legal contract with the loan. You can't have any loss to the agency in the past. You can't have any delinquent federal debt or unpaid federal judgments currently. You can't have any controlled substance convictions, no federal crop insurance violations. You have to have what we would consider an acceptable credit history. Typically, we're looking, that is 36 months of what we'd call clean credit history, no late payments, delinquencies, that sort of stuff. We don't report to the credit bureaus, but we do pull a credit history on our applicants. If there are, like we call them, blemishes in your credit history, if it's a one-time thing or it's explainable, those type of things can be, I guess, overlooked. If it's a medical thing or unforeseeable events. Test for credit, and that talks to the piece where I spoke about earlier. If you're able to get a loan from a local lender, we would require you to do that. We're not allowed to compete with our local banks for customers since we are the government and we do have artificially lowered rates and longer terms than they can offer. You have to be the owner and operator of a family-sized farm, but we do have those abilities for our micro loans to help some of those what might be considered smaller type operations. Managerial ability, so there's different, so for FO, our farm operating loan, that's like 1 year of experience. Our farm ownership loans, FOs, those are going to be, you have to have 3 years of farm management experience in the last 10 years for eligibility. And then we do have possibly borrower training considerations where the loan officer, if you're a new to farming, new to an industry, they partner you up with training, so you have 2 years to complete that training. Additional resources, the farmers.gov website is excellent. It has a ton of resources. I always direct people there if you're looking for information on anything. The farm loan discovery tool on the website here. In that the farm program fact sheets is a really good source of information. We use them in our offices all the time. They have a lot of really good information on them. It's that fsa.usda.gov fact sheets. And there's a fact sheet for all of our programs. So it gives you a pretty good overview of the program itself, what the eligibility requirements are, and that sort of stuff. I think that's it for that. So those are a lot of our loan opportunities. On our farm program size, we do have for people who are currently farming. Sometimes if you're new, I don't know, you might not know about our program. So we have what we call like our safety net program. So we have like an ARC PLC program, agricultural risk coverage and price loss coverage. We have DMC, dairy margin coverage for our dairy producers, our marketing assistance loans. So those are all like safety net programs. So if prices hit below a certain level, those programs will kick in and will give payments based a lot of times on acreage or your approved production history that we have on file with you. We do have, and we've got just a plethora of disaster programs. So those will trigger payments. Typically, there has to be an event, some sort of an event, triggering event that will allow us to start signing up people in those programs. Like I said, if you've got any questions on any of our programs, the farmers.gov website page has excellent information. The fact sheet page has really good information on all of our programs, but always reach out to our offices, reach out to our service centers. We're here to try to provide the best customer service that we can to our farmers in our area and help out any way we can. I guess, anybody have any questions at this time, or I don't know, Amanda?
Yep, that was just what I was going to ask. If anyone had any questions specific for Adam that they wanted to talk about on this. Otherwise, you can always reach out to me at agrability@wisc.edu, and I can get your questions over to Adam if you want to talk to him specifically, just the two of you. I do have a poll today for everyone who is on, so I'm going to put that up if everyone could fill that out, and we'll go from there. You should be seeing the poll up on your screen. If you can fill that out, that would be great. Also, Adam, I was just curious if you could talk. I know you shared a little bit about veteran farmer programs and SDA, but would you be able to go a little more in depth, or maybe if you know, like, could you give an example or a specific of someone maybe you know, obviously not giving names or anything, of how they worked through your program?
Yeah, so so we don't, so for farm loan programs, we have what they call targeted funding for our SDA and our veteran farmers. So we, every year, we're allocated a certain budget, certain amount of money for operating loans or FO type loans, real estate type loans. The benefit for our SDA and veteran applicants is if we were to run out of funding, those loans get funded first. So we basically kind of fall into an order of merit list, and our SDA applicants and our veteran applicants will get funded as soon as funding is available. So that can be, we haven't had it for a while, but in 2018, we ran out of funds for a while. And it was kind of towards the spring, I believe it was. So it was a really inopportune time for that to happen. And those borrowers were able to get their funding earlier before other ones. There's benefits for the farm program side, like for our FSFL loans, we do have a $100 administration fee. That fee is waived for SDA and veteran applicants. And also for our DMC program, there's every year there's a $100 admin fee associated with that. That fee is waived also for that. I'm sure people have heard now with the coronavirus bill that they just passed. They're doing loan forgiveness repayment for some of our SDA applicants. For that one, I think they're still trying to hammer out the final details on that. I know they're updating that farmers.gov website quite often. So there is a whole page dedicated just to that. So I know there's options or opportunities for people. You can, at this time, I believe you could change your, we have FSA 2047 form. You can call into your loan officer and talk to them about it also, but you could change or update your race or ethnicity. And then the details are out there about the loan repayment up to 120% of outstanding debt at the first of the year, January 1, 2021. I haven't been keeping too tight of tabs on that since I'm not a loan officer anymore. But I know we've been getting calls in our offices in regards to that. So, but that's that farmers.gov website has a constantly updated information on that page for it.
Great. Thanks, Adam. If you haven't filled out the poll yet and you still want to, you have about 15 seconds or so left to do so, and then I'm going to close it down. I do want to thank everyone again for attending this session, and Adam, thank you for speaking to us about FSA loans.
Thank you.
If you have any questions, again, you can reach out to me at agrability@wisc.edu. Otherwise, I can get you Adam's contact information as well. Or if you're looking for a specific county that you might live in Wisconsin, we can get you that contact information.
Yes, on the farmers.gov website, there is a service center locator option, so you can type in your county and all that the contact information for that county will pop up for you.
Great. And just a reminder, we do have another session for our virtual summit tomorrow starting at 11 o'clock. And that will be talking about farmer health insurance with Dr. Florence Bicote out of the National Farm Center, or National Farm Medical Center. And she also has a colleague joining us. So make sure that you check in tomorrow as well as Thursday for our virtual summit. Thanks, everyone.